Hello, my friends. My name is Matt, and this is my channel. Welcome back. I wasn't going to do a video today, but I was kind of feeling sick Thursday, so I was going to do a video before it got worse, but then it didn't, so here we are. Today, I just want to go over some more of my portfolio. I did make some moves Friday since I got paid more money to put in the market, especially at a time like this. It can't be a bad thing at all. So yeah, if you like this video, please like it, and if you want to see more of my content, please subscribe. I am a network engineer, not a financial expert at all. I am just a guy going through a life journey. I'm a black guy with a nerdy voice and a stutter. So that being said, let's get into it. Let's get it. So, things have gotten a little better since Thursday. I mean, Friday kind of surprised me. I mean, it looked like it was going to be a bad day, but then it shot up after hours. So, we have no idea if that's going to continue next week or if the market is still going to keep getting fucked. But, you know, we'll see how it goes. So as you can see, there is a bit of a difference since Friday. Right now, my portfolio is at $6,964. I did make some moves, and let's go take a look at that. So I got paid. One of the very first things I did once I got paid is I put $1,000 from my paycheck into the account so I could deploy. That's one thing that you should do. If you're going to do this investing thing, assuming, I mean, whatever money that you're going to put aside towards investing, as soon as you get paid, that money should get deployed. Money you don't see is hopefully money you don't miss, but you know. Oh, god damn, that's good coffee. What did I do? Alright, so yesterday, I bought 6 more shares of CSCO at $39.40. We're going to talk about CSCO in a minute. As if you can't tell by the tabs here, we're going to talk about CSCO in a minute. And I also bought 10 shares of Pfizer. I don't know if I'm pronouncing that name right, but we're going to talk about them a little bit. I decided to go into some more dividend-paying stocks, just as a bit of more of a defensive posture. Like, it's going to allow me to make some passive income. Could help out, you know, in times like this, and you know, in more of a bearish week. So that being said, we'll get into talk about some CSCO. So as you can see, since Friday, I am actually up $103 for the week, for the day. Up an additional $56 after hours. I'm not gonna go through each of these again, but you know, life sucks. So you know, right now I'm only down $225. You know, for all time. It's okay, because once the bear market ends, things are gonna go back up and life's gonna be bitching again. So let's talk about CSCO. It's one of my biggest positions other than Uber. We'll talk about Uber in another video, but CSCO, so I'm a CSCO-based network engineer, so it's a company I know well. CSCO is the dominant player in the switch field. I don't know if it's still the dominant player in the router field or not, but switches and routers is pretty much what CSCO is best known for, but it also does other stuff too. It's involved in firewalls with the ASA firewall. It started getting its hand into cloud-based solutions like the Meraki wireless architecture. It works with Cisco Umbrella for web filtering. It's got a bunch of other fields that it's into, but that's what it's known for. CSCO has had a bad couple of quarters, but if you listen to the conference calls, you'll realize that everything that's happening to CSCO right now isn't the fault of the company. So the business fundamentals have not changed, and my outlook over the next 3 to 5 years is still pretty strong for this company. As a result of that, and you know, the bearish week this week, the price is down to just below $40. It's got a dividend yield at 3.60%. That's pretty much the percentage of the stock price that you're going to make in dividends. So that will fluctuate as the stock price fluctuates, but that is not the first or last. That is not the first or last thing you should look at in a dividend stock. So let's take a look at some of these stats. It's got a forward PE at 12.38. So it is a really cheap stock. So PE is a price to earnings ratio. So you pretty much take the stock price, you divide it by the earnings per share. And I'll probably go into more of this stuff in later videos, but this is more about CSCO than about the fundamentals. And again, there are probably better resources to go to for the fundamentals. I'm just an average guy trying to make sense of this. But the forward PE is 12.38. You'll want, if you want a dividend stock, you want something under 20, which is below, which is, I think the market is trading at a 15 or so PE. I could be wrong. So 12.38, pretty good for a dividend stock. If we go down here, CSCO has a payout ratio of 54.47. Payout ratio is the portion of the company's profits that it pays out to shareholders. So right now, CSCO is paying out 54.47% of its profits as dividends to shareholders. Now, another thing you want to look at if you're going to pick a stock for dividends is it raising its dividends every year? And is it constantly paying out dividends? So we're going to look at the past 5 years, and you can see that CSCO is definitely raising its dividends. So 21, 26, 29, 20, 33, 35. Per their last earnings call, they were raising their dividends to 36. So that's not on there, but I mean, they're raising it again. So as far as dividends, strong dividends. So there's no foreseeable chance of them cutting their dividends or or stopping it altogether. Now, as far as their financials go, let's look at their balance sheet, especially for a dividend stock. So you want to look at the cash and cash equivalents and add those together. Compare that to the debt. So right now we got 32, probably a little over 33 billion in cash, and 14 billion in debt. So what this means is if CSCO faces some bad times in the future, like some real bad times, it has enough cash to cover itself. And as you can see here, it definitely does. If you look at the income statement here, revenue has been fluctuating. It went up. Now, as far as the quarterly, though, it's had a few bad quarters, especially the past one. Again, this isn't part of the fundamentals of the business. So CSCO, a lot of its traffic, a lot of its business was done in China. So it was very negatively impacted by the tariffs and the trade war. It's going to keep being impacted as long as those tariffs hold. So the idea is that eventually the situation with China will get resolved, or maybe it won't, but hopefully it will. And when that gets resolved, we expect that the demand the shoot right back up, and CSCO should be on its feet. But for now, it's gonna make a good dividend stock. As far as growth, not a lot expected. So if you look at the analyst estimates, right now this year it's expected to do 50.94 billion, which is a little shy of last year. 2021, it's expected to shoot up a little bit. So there is some growth that's going to come back, but it's going to be a year before that happens. So that's CSCO. Very strong dividend play for now. The price is really cheap to get in on it. It's a good stock. In the future, it'll be good for growth, but for now, it's pretty good for dividends. So if you're looking for a dividend stock, I'd recommend checking them out. Again, not financial advice. This is just my thoughts. If you're going to get into trading and stuff, and you're going to be putting a lot of your worth into the stock market, you're going to want a emergency fund that is stored someplace other than your checking account. Your checking account isn't paying shit on interest. So you put it in a high interest savings account like Ally Bank. Right now they're paying a 1.6% interest on it. Probably not the best not the highest in the interest, but it's doing a good job. It's much better than any bank that you're going to choose. So this right here is money I stashed. You're supposed to have 3 to 6 months worth of savings in here. I'm just over 2 months worth of savings. So if everything goes to hell, I mean, I got this account on for 2.5 months. I'm slowly growing it over time. But the idea is that if you're going to be doing this, you should have an emergency account. And this is stuff that you don't touch unless shit absolutely hits the fan. That's all I wanted to go over, guys. I am going to put a link in the description of this video if you want to start a Robinhood account. If you use that link, I'll get a free stock out of it, and you'll get a free stock out of it. So, anyways, I hope you enjoyed this video. I'm gonna go about my day. If you like this video, well, like the video, and if you want to subscribe, then subscribe. Thanks, and have a good day.